Hello traders, Gary Wagner here, just about 1 o'clock in Honolulu, 6 o'clock in New York. It is Monday, 10th day of February, 2020, and this is the daily report for gold and silver. Although the outbreak of the coronavirus continues to spread and we saw gold modestly higher in the early part of the trading session, it is now trading off on the day. We'll talk about that when we pull up our price charts. However, something that is most concerning is something that was read in the news today. We know that the coronavirus is spreading quicker because it's not as deadly. The incubation process is longer. You can be contagious for 2 weeks without showing symptoms. However, there was a report today that now says that there has been more deaths from the coronavirus than SARS, and that is truly a terribly scary thought. Let's take a look at our current pricing. Traders, gold basis, the most active February contract, is currently at $15.7570, putting it down $3.80. It did have a high today of $76.40, which goes right to the top of our current resistance line. We will discuss that in detail as we pull up our technical studies. We did have a mixed bag in the precious metals because palladium was one of the few metals, the only metal, that actually closed higher today. 2263.40 up 1360. Platinum was down fractionally $1.40 at 965 and change. And finally, silver down 0.2% at $17.75. Let's take a look at our current technical studies. Traders, before we get started, I do want to apologize for delivering this video report a little bit late. We did have technical difficulties earlier. Traders, an interesting start to the week. We can see by looking at the single candle that came in, which is this, that the high or top of the candle came just up against the former support line that we are now labeling a resistance line. We also saw that activity occur on Friday of last week, and currently, as you can see, we're trading at $15.75. As I said, my belief currently is that we should see this market go higher. However, our major caveat right now is that we have to see it go on a closing basis above this particular trend line. And this, of course, is a moving target because it's based upon the angle of the lows. One of the other things is that when we look at our daily chart, in terms of an Elliott wave count, and we've talked about this before, it seems that we want to look at the sub count just below this. Now, to do that, we need to go to a intraday chart of either 240 or 480 minutes. We did receive a couple of comments over the weekend that said that clarified that for many of the viewers. So let's go ahead and view the market through the eyes of an intraday chart. As you can see, we have converted our daily into a chart that is 480 minutes in length. That's basically an 8-hour chart. The key difference is, of course, this support line here that is now resistance remains the same. That doesn't change. But what it allows us to get is what's called a sub count. And so when we look at the intermediate count, we get our large A, our large B. As we spoke about the other day, you'll notice that this B wave can be subdivided into an A, a B, and then our small c up here. And then we get our completing wave, which is our fourth wave, and our C wave down, which means that we are most likely in a fifth wave. We've talked about our upside target being anywhere between 1640 and 1660, roughly in that area. But here's the caveat that I'm having now. Typically, when you look at any size Elliott wave count, it can be subdivided into a smaller count. And that's what you're looking at right here. And so traders, when we do that, what we get is a wave 1. It's a very thin green line that I'm putting up. A wave 2, our wave 3 up here, our wave 4, and then finally we're getting this fifth wave up here. What that means is that most likely we will get some sort of an A, a B, and a C. In other words, we could see the market slightly correct at this moment, even though we're still in a very much bullish mode. And so for that reason, I have held off issuing a buy signal. As I said, we need to see one of two things occur. The first thing, and I believe the most important thing, is an effective close above the resistance line that we're looking at. Also, when we look at where these prices are at about 580, we can take that pretty much across, and we really have to go pretty far out in history to find another top that matches that. So my recommendation is for right now to maintain our current neutral stance with no active trades in gold or silver. We are looking for an entry point. We just want to determine if we'll see some sort of a correction or just a rest area before moving to higher ground. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.